Good morning, everyone. How you doing? Happy Veterans Day. Oh yeah, today's holiday. It usually makes for a slower day when the banks are closed. And we'll see. Good morning, everyone. I always forget to mute that. All right, where are we at here? So the midterm election's over and the big rally day and nada. Right? Break down below the low of the rally day, or kind of sort of a breakout bar failure, not the same kind of shock that happens when it occurs out of a base, as something, whatever it is, stock or a commodity or ETF is basing sideways out of a consolidation, and it breaks out to a new high. It doesn't have to be an all-time high, but a new high within the recent trend, and you get an inside bar, and then it breaks below the low of the inside bar, which majority of the time will result in a break below the low of the wide range bar. So this was more of a continuation pattern where you made the V bottom and, you gapped up and consolidation and another gap up. So this made for a pretty difficult situation for participating in this, unless, of course, you just are willing to buy down here. I was looking for a retest of the low. That didn't happen. So I didn't take advantage of this move. And then, of course, the gap and big red day and then another gap, other than intraday trades, very difficult, if not, well, not impossible, but I guess impossible for myself to participate in such a pattern because it isn't one of the type of patterns that I trade. So now the question is, does it pull back into this area? And we've got a pretty odd scenario here, meaning different markets looking quite different, out of sync with each other, I should say. And we'll look at those. Whereas, the NASDAQ is looking much worse than this. And yet the Dow looks like, and I said this last week, is it possible this could make a new all-time high, with this pattern, and everything else not do anything? So that's something we'll see. But what I'm hoping actually sets up now is a larger bottoming pattern, where I was hoping for a retest, a W pattern. Now, what I'd like to see is a head and shoulders type of bottom. And we'll have to see if this actually sets up here. And as you can see here, pre-market, the S&Ps are kind of flattish, but that isn't the same everywhere. NASDAQ is down considerably more, where this is kind of just hanging out. And we're going to take a look at the Dow too. So let's just take a look at those, and we'll look at the futures. But what I'm hoping for is that head and shoulders type of bottom here for setting up of the end of year rally. So we've got the Qs here at 170. So breaking, well, just slightly below and hanging there below that low. And so the question is, this head and shoulders bottom is going to look different in one market versus the other, which isn't unusual. Sometimes they're in lockstep, but this here looks like maybe it's got to test this low since it's right here now. It's filled the gap. And so you can see, obviously, it's at 170-ish. And so now does it have to come down here? And is that enough time to set up? So once it comes down here, I'm always looking for the ideal pattern. We're price pattern traders by definition. So the ideal type of pattern would be one in which, okay, it comes down here and hangs out a few days, maybe pokes a little lower and comes back up, which would kind of put us into Wednesday or maybe Thursday before something would happen. And whatever news might come out by that time would be digested, and we'll see how it all sets up. Now, one of the things I wrote about in the letter, which I always do on Monday, is different scenarios. And one of the scenarios was, well, what if it comes all the way down here? And because we have to figure, well, your ideal scenario of a head and shoulders bottom, fine. But what if that doesn't happen? Well, what if it comes all the way down here or breaks it? Well, At that point, we have to look at this as a real mess and a trading range situation. And that assumes a turn here versus, breaking down to new all-time lows and heading lower. That would be not in my immediate plan, that's for sure, because there's no reason to think that as of yet, with this bottoming and our internals being where they're at. But we'll get to that if I can here. And the last scenario was, and that doesn't look like it's happening unless today turns into a big turnaround day, would be a continuation move, from this going higher. And that would just be awful, because that would be the most difficult, I think, to participate in, other than just hitting the button and going into hope mode that you don't get whipsawed up at this high here. So it's Monday, it's early. We'll see how this all plays out. IWM, just kind of flattish, and this led the way down. So this one may form that bottoming pattern before the others. And we'll have to see. It held this low, which is right here. But again, you break out inside body. It moved a little higher and broke down below. That's pretty much what happened everywhere, except here's the transports. Broke below the low on the transports. And the diamonds not only cleared that high, it cleared that high with authority and pushed up into the next resistance area. So the Dow here is showing relative strength, getting further above the moving averages, above the October high, and pushing up into the next resistance area. And it did not violate Wednesday's rally low. So pretty interesting pattern, comparison of patterns here. And so what's the Dow going to do here? Do we get the head and shoulders bottom? And the Dow shows relative strength by going sideways up in this area. So looking at different markets, we compare relative strength and weakness. We can compare the probabilities of one moving versus another. So while this one would show relative strength and could make a new all-time high into the end of the year, percentage-wise, I think that there's greater opportunities in what's been beaten down. It'll probably stall at different, just what prices do at different resistance points. But percentage-wise, these ones that have underperformed will probably outperform, since the Dow here has already been outperforming. So you can apply that thought process to, different ETFs or stocks within a sector, as that during a correction, the best, and I'm not saying the Dow's the best as far as these indices go, but when we compare stocks, the best will typically lead, and then the laggards will play catch up. And here's where our futures are. You see they're pulling back, and it looks different since it's a 24-hour chart where they're above the rally day. But this looks more like, it makes sense as to what happened, where you get the wide range bar reversing, and then it continued up, and you get a wide range bar ending at resistance, and now it's pulling back. And now how far does this correction, go on before it's ready to, we get enough information. I was going to say ready to go higher, or if it keeps correcting lower, kind of like what oil did, where you start with a bullish pattern, which obviously suggests continuation. This didn't suggest falling apart as this did. So within a pattern such as this, where you get a move to a new high, one of our concepts is a greater than 100% retracement, typically results in a slowing of momentum and some type of corrective action. It didn't suggest this. But here you had a type of breakout failure where it made a new high and then it broke down below that bar. That creates uncertainty and a correction, but not this. So this just, for whatever reason, just continued to deteriorate and didn't hold the initial support. It couldn't even break decisively above a prior day's high. Here it did for the moment and failed and continued to go lower. And now it's gapping up after the weekend. So Here's the next low here, or obvious place where buyers would want to step up. And you've got kind of like the measured move here and down, which would put it in that area. So we'll see if oil begins to stabilize down here at 58 bucks. NASDAQ, obviously weaker, pushing down toward the low of the wide range bar, right? Never a good sign. It's not what's supposed to happen, right? When we get a wide range bar, what it's supposed to do is stay in the upper half, and ideally in the upper third if it's really strong. When it goes back down to the low of the wide range bar, an obvious message of weakness and sellers in control. And you see what had happened here when it did it and then headed lower. So we'll see how this all shapes up. As I said, this is the same area. We looked at the cues. Does it come down here and begin to stabilize and then begin to form, this head and shoulders bottom scenario? So in this area here, let's see if it holds and then chops around where we could look for longs at that point. And Dow, obviously the strongest, right? So we'll see how far this corrects. So far it's holding here. And this is what we'll monitor in the beginning of the week, how far these corrections go. And then, of course, that assumes that's what's starting today is going to continue. And, of course, we'll monitor that from an intraday point of view. As you can see right here, the Dow is trying to hold that low from last week. And then if it doesn't, it opens up the door to coming down to these next levels. Bonds, trying to hold this area here. They're still in a downtrend, trying to make a bottom. Oil we looked at, and gold just disappoints, right? Broke below the wide range bar, heading down toward the bottom of the base. But bases do this. We talked about this last week, that, this is the process of making a bottom. And whether this is, going to be the bottom in gold, we'll see. So far, we're not sure. This looked interesting, and it couldn't get through the next resistance area, and it's falling back. So could this be a measure type move like we saw in oil? And so it's not the exact thing, but the idea here, looking at, trying to get that back to a daily chart. Hold on. An initial move, stabilization, and then a continuation move down. And looking at this from the weekly time frame, so all concepts are applicable. Could this have been one move? This was the stabilization, and gold is heading down. We got to get through that level, of course, but way down here. So, so would bottoming patterns either be quick or stay away? Take your money, or, you take partial profits and then hold on to some. And if it disappoints, you get out of the way and you see what happens. And I think that's it. Dan can review. Looking at things from last week, anyway, the ETFs. Retail was one of the better performers last week, but a lot, because so many markets and ETFs gave back the gains from Wednesday. In this case, this continued higher on Thursday, where most markets didn't. And then they gave back. We had a whole lot of weekly charts with indecisive weekly candles with tails on the top. So, and this would set up ideally with a double type of bottom or a higher low. We'll see how it sets up. But a main point being is that while this initial move off of the low might disappoint some, it's exactly what should happen for us to take advantage of a bigger move, because V bottoms and moves back up to the all-time high or prior high in a deep retracement like this are unusual. Sometimes they happen, But what happens the majority of times historically is more complex patterns where bottoms are retested. And that's where you get big moves. You don't historically get big moves from V bottoms like that. So I'm hoping for something like this because we'll obviously make more money and relatively easier money with a pattern like that. So that's it. Dan, I ran a little late, sorry, but all yours.
Oh, no worries. Thanks. Good morning, everyone. Well, yesterday was Veterans Day, but I guess we're celebrating, well, the banks are celebrating it today. Talking about that bullish retail sector, we had ROST, ROST, in both our letters, and they stopped out. I had a trailing stop here, and we just got stopped out at a profit on Friday. We're very light on inventory. In the advisory letter, we have one position, Oracle, which we're already out of 2/3. In the weekly, Visa put spreads holding fine. Adobe, deeper retracement, obviously, than we wanted, but it's still a put spread way out of the money. Stop is far away. Lulu, a call spread, looking fine. And those are only 3 opens in that letter. And it's extremely rare for us. But in the weekly letter, we gave 0 new recommendations. I mean, we didn't have anything high probability. So why jump into the lion's pit and get whipped around? No, CRM stopped out on this breakout day here. I moved it under that low. And so that stopped out on Friday. And here's a few we have on our watch list. C block, short, CRE, carryover, bullish from Friday. Cold, wide range bar. Now we found this through scanning on Friday. We're going to look for a pullback. AAOI, nice little gap reversal there. Climactic weekly. We purposely want it to be hard to enter, which is over Friday's high. Let's look at a bunch of gappers here today. Newer, $87, gapping into a mess. Boil, which is the natural gas, gapping up again, coming in. That's hard to trade. It's a commodity. Mighty Mo, 61 bucks. Wow, that's a bearish gap for Mighty Mo. After that breakout, wow. Nothing to do though. There's our oil. It's in a nasty downtrend, so going to be in no rush to get into that. ATHN. So Alex said that's a buyout, but when I was looking at gappers, so let's just look at it anyway. It's gapping. Yeah, there's some resistance there, but I like that it's gapping out of this multi-week trading range right here. And it still might be tradable as I typed. I'll still look at a put spread because there's still risk of, I guess, it gapping up. The merger is finally effective. But let's see. I mean, it's still going to move based upon it moving with its brother. Wow, it's got clocked on Friday, 55. Wow, it's getting clocked more. Look, I got to go to my monthly here. 55 bucks. Wow, that's pain. Bison, 34 bucks. That I got to go. Well, here's my weekly. So it's gapping there. That's an ugly gap. We'll see how it sets up. It's ugly. These are the opens we just talked about. So our Lulu down. We can tighten the stop on that. Apple here getting whacked, 199 bucks. And that, I was on this earnings gap down. I was looking to sell out of the money call spreads, but it just wasn't that juicy. But that obviously is what's not helping the NASDAQ today in terms of relative weakness. Light, it's getting whacked. Remember Friday I was saying, my God, there's so many disaster gap downs. There's a few of them here today. 42.50. It's off my weekly chart. That's ugly. And it's holding up though. It's actually a bullish pre-market. We'll come back to him. PCG. Wow, that's similar to EIX. Look at that. 30 was off the charts here. Geez, that's ugly. And these are utilities. Now this is a fantastic lesson on people who say, oh, go to the safety of utilities because I get my dividend. Well, okay, what if you bought it here at 70 bucks and whatever, few pennies dividends you get, now you're holding a $33 stock from 70. How do you feel about that dividend now? Wow. Hey, good morning, Andre. BTI, another tobacco getting whacked for some reason. It's a nasty downtrend. Daily, weekly, monthly. Bullish gap here. This kind of looks like a buyout. When they gap up and just go sideways, look at that monster gap up, 38 bucks. Nothing to do there. Overstock was just a leftover short watch. STI leftover on the long side. BHC need a pullback, but I like this big move off the low with a interesting monthly. Ulta, I just threw this in our long watch list. In the advisory letter, we gave a long and short watch list, but that's a pseudo 1, 2, 3. There's our cold. I have down below, so I can get rid of it here. UBNT, I would love a 1, 2, 3. Look at that gap, wide range bar, breakout, daily, weekly, monthly. 1 minute to the open. There's our C block. Cree I got below, Ross stopped out. Here's a long watch. I put this in the list, Starwood. Bottoming tail, range expansion, breakout, WIGME, put this in our long watch list. Vert, after this breakout, ascending triangle daily, that's on my watch list. Ka, it's on my watch list. Lima Bravo, it's just too extended for me, Cliff. What do you mean daily 3-bar play? What does that mean? Are you talking about consolidation? Because that it's just too extended for me to get to have a play there. I noticed some of these marijuana stocks gapping up a little bit, but there's no entry. VCell is carryover watch. Moss is carryover watch. Sienna, I'm looking for a pullback. GE dog is still a dog. And perfect timing. I finished my, this thing was disappointing. This stopped us out. Where are you? That marijuana stock. Oh, this is Tilbury. There's just no patterns. Let's look at the indices again. So spiders, at least on the 15-minute chart here, this is pre-market data, obviously. If it holds here, that's a higher low on the 15-minute chart, but deep retracement here into the close. Diamonds, actually, it's stronger on the daily, as Greg was talking about, blasted through that prior highs, but actually took out its prior low here on the 15-minute chart. No rush there to do anything. Q's, same. Look, took out the low and is just going sideways, but it's at the gap fill area. IWM holding the best. 50, less than 50% retracement, going sideways. Wow, this is a big fat. I got nothing juicy here. Nothing. We're on the hunt for quality. This ATHN, I'm just gonna, wow, it's up $1. I'm just curious. The 130s for Friday, 0 by 15. Yeah, so there's no juice there. STI, yep, got on my long list. I would give it at the 30-minute high. I would be in no rush myself to get into anything here today. EA, there's that continuation short. That looks lower. That looks like a great short. Continuation short. And you didn't have the weekend risk. Just pretend the market were still open. Nice downtrend on the 15. FVC. The heck is this? Overstock. That was a continuation short. Same thing. Look, bearish 15-minute. Poor thing looks horrible. All right, ATHN, you're gone. Wow, look at this EIX, even more. Holy cow. Is this a California company? Is this because of the fires? Wow, I feel horrible for the devastation that fire is causing. I mean, they were showing on the news today these people in their cars like they're in a movie. I mean, you know what I mean, an adventure, scary movie. Fighting Mother Nature, and they're friggin' in the middle of a firestorm in front of them trying to get out of town. We will get setups on these, you know, that. So let's separate the tragedy, you know, from trading opportunities. So the volatility on these things is going to go through the roof right now. And they don't even have out of the money strikes right now. The lowest they have for Friday is $50, and it's untradeable. Right now it's $1.15 by 490. Alex, what was that credit reporting agency that you were watching last week? Because we traded that one when it had the data breach. Yeah, what's the symbol though? God, I'm blank on it right now. Shoot. Monday morning, I guess. Well, that's not the one I traded. No, it wasn't FICO. That's the competitor. No. So what's the competitor? But I like this. I'm going to put this on my list. I like it. What is it? Experian. There you go. EXPE. No, that's not it either. No, that's Expedia. No wonder. That's it, Sanjay. Thank you. EFX. Yes. EFX. So on this data breach, I remember it. This is when they had to admit that, oh yeah, I breached confidentiality of whatever, 150 million people, whatever. And we sold some. Look, yep, this was it. I remember it clearly. And then we dropped down to a daily time frame. And I remember selling these 60, like $40 out of the money. and we got crazy premium. I don't know what its problem is this go around, but look, we're definitely, I'm putting this on my list. We got some opportunity coming up here. EFX, FICO, those, where's this other utility? So that was, wow, look at that. Holy, no, I can't say holy, sorry. Wow. Wow. Look, this was just $50 a few minutes ago. Where was this other one? I looked pre-market. Here you go, PCG. There you go. My God, these things are getting clocked. So tell me somebody the fundamentals behind this with the fires. Are they? Did somebody allege that the faulty utility pole caused the fire? I don't know the fundamentals of this one. Okay, thanks, Ben. Wow, we're witnessing again. Separate out the tragedy. I have friends there. I live there, and it's horrific. But this is an amazing thing we're witnessing here. Trading wise, again, keep it separate. Let me see what PCG is doing here on the put side. Wow. Wow, the lowest strike they have is 35. That in and of itself is telling you that this thing is tanking. Just looking at that strike. That's just a fact. And these are crazy spreads too. They're untradeable. That's for Friday. They do have 25s going out to December, but this is preposterous. Okay, they just adjusted them. They were 0 by 490 a second ago, and it's 939, which is ludicrous. Now they're back to 5 cents by 480. These are out of control right now. Wow, that's